on the last segment of our interview, in the second part of our discussion, I'd like to talk about Canada's future and the major themes that you think will be guiding the Canadian economy going into the 2020s and 2030s. But first, I want to talk about the Canadian Central Bank's gold reserves. Now, as you're aware that Canada is the only G7 country with no official gold reserves currently under the ownership of the central bank. Now, the Canadian Central Bank has been selling off its gold reserves steadily since the early 2000s, but has never repurchased any of the gold that it sold off. Was this a discussion that you've had with your colleagues while you were at the helm of the Bank of Canada? What to do with Canada's gold reserves and why Canada should not be purchasing more gold?
Well, the issue is quite clear that it costs to hold gold, whereas holding U.S. or Chinese or Euro bonds yields you a return. And so the sensible thing looking forward was to hold reserve assets in the form of claims on other governments rather than an asset which was costing us money to hold. So that was a strong view, and a view that our international monetary system that was in place was sufficiently robust that holding this antique instrument of stability called gold really didn't make any sense.
You wouldn't support the view that I'm guessing that gold being an entity held outside of the control of any one particular jurisdiction is not privy to international and or domestic turmoil. It's not volatile like other assets. It provides that inherent stability no matter how antiquated it might be. And so governments around the world have and currently still do rely on it as an anchor for their reserves. That's not a view that you've shared?
No. It is only an anchor in terms of the price of that particular asset. So what people talk about anchoring is trying to anchor the prices that you and I see in the marketplace every day. And the best anchor that we have found in modern times is to target keeping that inflation rate at 2% in terms of monetary policy. And it's been very successful for 30 years and will be successful again.
All right. Well, going forward, do you think that digital currencies like Bitcoin, perhaps, or other forms of cryptocurrencies could in fact replace gold and end up on the balance sheet of the Bank of Canada?
Well, I wouldn't think so. In many ways, for precisely the same reason that we didn't think gold made any sense on our balance sheet either. But the issue of digital currencies is a very important issue. And it's very important because what we would like to do globally and what we would like to do in Canada is to reduce transactions costs. And how do we do that? We reduce the transactions cost by not having everything have to flow over the books of our commercial banks, and that the commercial banks be responsible for, as they have been, for the maintenance of that system. And in a digitalized world, we are in this country, I would say, behind much of the world in digitalizing financial transactions, and hence reducing the cost of those transactions. And so that's going to come. That's going to come in one way or another. And people are working very hard, both at the bank and at the Department of Finance are working hard. We would like to see them work harder, maybe, but they've been working very hard on this issue of digitalizing our financial system to reduce transactions costs.
Well, there is going further, one step further. The Bank of Canada is not just interested in digitizing the financial system, it's interested in digitizing the Canadian dollar, as is the Bank of England, as is the Federal Reserve of the US, as is the Chinese Central Bank. I'm just going to read a paragraph from a press release issued by the Bank of Canada 2 months ago. It says the Bank of Canada and the Massachusetts Institute of Technology, MIT, today announced an agreement to collaborate on a 12-month research project on central bank digital currencies, CBDCs. The bank will work with the MIT Media Lab's Digital Currency Initiative team to explore how advanced technologies could affect the potential design of a CBDC. So this is something that's very much in the works at the Bank of Canada. They've created a number of new jobs specifically for this project. Why do you think it's necessary for the Bank of Canada to issue a CBDC?
We don't know whether in the end it will be absolutely necessary to do that. But what is very clear, it's absolutely necessary to do all of the work on all the components that would go into a fully digitalized system. Necessary to do that work. That's a lot of technical work. Whether in the end a retail CBDC, retail being one that you and I have in our wallet, just the same way as we have dollar bills in our wallet, whether we will have a retail system so that in our digital wallet we hold central bank digital currency. I think that is a much more debated issue. We just held a big workshop on that, and it's not clear whether as a retail token, a central bank digital currency will be important. But what is absolutely clear is that as a mechanism to facilitate transactions between providers, whether they be banks or other providers of retail transactions, that sort of coin that will be extremely valuable. So there's debate in that component certainly, but actually little debate about the necessity to move quite quickly to facilitate those transactions and reduce the really very high costs of making those transactions.
I'm just going to make one remark on this and I'll move on to the final subject now, David. There have been critics of central bank digital currencies at large, not just from the Canadian side, but from the US Fed and abroad, that the government may be using this as a tool to monitor and more strictly control the population and monitor capital flows. You'll recall that in China, they already have a system of doing that. Now, the Chinese central bank digital currency is just an extension of that system whereby they can limit how you spend your money. And the critique here is that in the West here with CBDCs, the Federal Reserve, for example, is able to do the exact same thing as the Chinese. Is that a concern that you share, that basically we will lose our entitlement to privacy and financial freedom should we have CBDCs implemented here in the West?
So part of the issue, part of the issue is how to construct a digital ID that is robust and doesn't open itself to other uses. That is true whether it's a central bank digital currency or whether it's Bitcoin or anything else, right? That is the issue. My own view, and it's a rather strong view, is that we have been very slow in figuring out how to provide Canadians with digital IDs. Not so much necessarily for the financial system, but for our health system. And so the fear that Canadians have, I think, is understandable, but that it is that very fear that we need to try to overcome if indeed we're going to have efficient delivery of health services, if we're to have efficient delivery of all sorts of government services, if we're going to have efficient delivery of financial services to people, we're going to need that strong digital ID to enable those transactions to take place. And so we're going to have to find a political way, because this is a political or a social issue, not a technical issue so much. We're going to have to find a political way to overcome that fear in order to benefit from a health system that works better, a financial system that works better, and indeed an economic system that works better.
Okay. Now, finally, you have identified factors that will reshape the Canadian economy going into the next decade and beyond. In particular, you've mentioned that the boomer population is getting older and will be gone in a few decades. Now, this is currently the boomer generation.
Well, not gone, I hope.
They will be ingrained in our memories forever. But currently, this is the generation that holds the most amount of wealth in the West. With their passing in a few decades, what does this mean for wealth transfer in Canada and the growth of the Canadian economy?
We'll see whether the baby boom generation behaves differently in their old age than those of us that were born before or before the end of the war, at any rate. And we don't really know. We can take some guesses of what will happen. But yes, indeed, what we have observed to date, and which is really important, is that the participation rate of older people, of let's say the 65 to 75-year-olds in the economy, is starting to rise and will continue to rise. And that's really important for what happens going forward, that participation rate rises over time in order to facilitate the production of goods and services that we need in our 80s and 90s, when physical limitations may prevent us actually from working. So I think that the big issue, in some sense, is going to be the adjustment of the behavior of the young old, let me call it that, the 65 to 75-year-olds or 65 to 80-year-olds, and how they indeed engage in the labor force. And that will determine greatly the rate of growth of the economy that we can expect in the future.
All right. Do you think climate change would have a role to play in this growth?
Absolutely. Absolutely. Initially, decarbonization. Climate change is a big yes. fuzzy concept.
Yes.
But decarbonization, the initial impacts of decarbonization are clearly negative for growth. The adjustment costs as we move from hydrocarbon-based energy to green energy of some sort, the adjustment costs are really quite high. And the faster we try to move, the higher those adjustment costs are. That I think is the case. And so the trick that we're trying to pull off collectively in the West and here in Canada is to get that balance right between the investments that we have to make to move to different source of energy supply and different ways we consume energy, the investment to take us there, while at the same time ensuring we don't have a collapse of the economy in the intervening period. That's a big problem for us. We are lucky in Canada in that we are a hydrocarbon producer. It's much tougher for the Europeans who have to rely on import of energy. So we have to try to move quickly. We have to make those investments. We have to raise the total level of investment that's in the Canadian economy. And we are at very low levels of total investment in productive capital at the moment. We're going to have to raise that. And that means that we will need to take the earnings that we are getting from the current increase in oil and gas prices and redeploy those earnings into investments which will guarantee us a future, a future of low GHG production of oil and gas on the one hand, and second, alternative energy production, other sources of energy production on the other.
All right. David, it's been enlightening talking to you today. I thank you very much for your time, and I thank you again for joining Kitco, our program. Thank you again.
You're welcome, David.
And thank you for watching Kitco News. I'm David Lin.